Welcome to another AriasWave market update. This is going to be a video on the USDCAD. One of my viewers kindly asked if I could make a video on this pair. So I used to cover CAD quite a bit in the past. It's been a little while, but I was looking over this chart in the last few days, and it's very interesting how the patterns they're very similar to what's going on in the Dixie. The same thing is happening. To me, it's amazingly clear as to what the pattern is. Um, Basically, it's just the same thing, but what happened before the sea, like when the sea wave was occurring, it's it's definitely a little bit different than what you see on the Dixie, but like in obviously the Euro, but it's still basically the same thing, especially now. And the reason for that is because we're in an E wave. So the E wave has become quite clear in the Dixie and the Euro, etc. And it kind of adds credence to the whole idea. So I'll link the Dixie US dollar chart video below, um, just so you can have it as a point of reference. So if you go to like a historical rates chart that you can find online, you'll see that this C wave. It does move up since 1953. It does move up in five waves, and it's just amazing how it adds credence. And the D wave is a sharp zigzag, right? It's sure it's an expanded correction within the zigzag, but it's still a zigzag nonetheless. And it's a great example of how zigzags can look like impulsive moves, right? And like for example, the Great Depression moved down. I believe it's zigzag, right? It's just an expanded of the expanded kind. I call them type two zigzags, and what that means is the B wave, the end of B wave ends like below in this case the end of the first wave A, right? And it's very important because I mean it just shows that it's not anything else like a five wave move, for example. So in the markets, you only have two patterns: zigzags and five wave moves, right? And those two patterns make up an entire correction if you understand how they unfold and the variance. They're always there in the same order, and if you just know how to order them, you can basically determine the correction and so forth. Um, so looking at the move up since 2008, right, we can see that the first move up was a zigzag, right? Um, and it's interesting because after you get a D wave, you don't get a zigzag, right? So what could that possibly be? And it's obvious to me that it's a type one weak way five wave move, and it's amazing how clear it is on this chart compared to the Dixie, where you saw like the three wave move. It just looks a bit different, right? Um, and that's fine because these moves don't have to happen exactly the same on all the charts, and they don't. That's probably what might confuse people who try to pull apart the waves using, I don't know, Elliott wave or something. It just doesn't make any sense. But when you look at it from an Arias wave perspective, it's very clear that the first move up was a wave one zigzag, right? So that being the case, what are you going to look for next? You're going to look for not obviously the wave two correction, right, which I believe ended here, right? But you're going to be looking for another zigzag for wave three. So what have you seen so far? You've seen only wave A of a wave three, right? And this, once again, this adds credence to the whole idea. Now we are looking for wave B, obviously, to end before we could see the wave C for the wave three zigzag. So in saying that, I'll go down to the smaller degree shortly. But you know, depending where this B wave ends, right, we will be looking for the C wave, right, which we're going to take the length of wave A, and then we're going to extrapolate that from the point at which the B wave, the wave E ends in the B wave, right? So how are we going to do that? So it's interesting because obviously we've seen wave A of the B wave. Okay, so I'll do this in official AriasWave colors so you can see it. Right, so we had the wave A, we had the wave B, right, and we had wave C, which is a more of a recent move down in the last, since March 2020. The move down, which lasted, just over a year, was a wave C. So, obviously, naturally, we're going to expect the next move up to be a wave D, and that happened. It's very clear that it happened, right? So I believe that ended not too long ago, September 2022. Now, let me talk about what can possibly happen here, and the reason for that is because of the size of this D wave, right? So the size of this D wave indicates to me that we could potentially see, a fairly good pullback in the USD CAD. And usually, what I see in these scenarios, now this may not play like this, but chances are it might. So I usually see what I call a CDE pattern. So when you see a completed wave D, because we're only looking for one zigzag in this case, you then take that, put it at the end of wave D, and then you're expecting this type of move down. Now, is there any confluence in doing so? So, in my opinion, knowing where wave two ended is important because it's a line in the sand, somewhere to draw your fibs from. Because you don't just draw them from anywhere, in my opinion. You draw them from somewhere meaningful. In this case, it's going to be the end of wave two. So if I take a fib from that level up to the end of wave A, that pullback, we could see it dip back down to 0.618. Okay. Now, as I mentioned before, these patterns don't unfold exactly at the same time as they unfold on the Dixie, for example, right? If you go back from 2016, sure, we got something similar, but not quite. It was not. It's actually different, right? It's actually the A is bigger, the B is bigger, the C's pretty big too. So the end of wave B is March 2020. I mean, in the Dixie, we saw basically the end of the D wave in March, yeah, March 2020. So it's already looking different, right? So therefore, you can't really say that this follows the Dixie exactly because it doesn't. So that's why, like, I'm just using my logic here, and I'm just gonna put it out there that this actually could pull back a decent amount from current levels, right? And in terms of percentage from current levels, that's going to be maybe potentially at least 12%. Okay, and that's back down to the 0.618 measured from that area. Now, whether it dips down a bit more than that, whatever, right? Does it really matter? Not really. It doesn't have to be the same length. I suppose what we're just looking for here is just areas of confluence, and also during the time that we're seeing this unfold, we're counting the waves. We're looking at all the wave structures and try to get a complete 5 wave count down. And look, we're still at the highs there, so there's nothing wrong with that. So in terms of just zooming in now and having a look at that area, let's just have a look at what I can see at the small degree, just to get a feel. So sorry, let's go to the 4 hour for a sec so I can just regain understanding of where we are. Right, so that looks like a complete D wave there. I'm going to put the line in the sand up the highs there. Potentially we can see that there is, since that time, potentially, yeah, look, I could see 3 zigzags already. So there's one there, there's two, there's wave 3, yeah, wave 3, and then 5. So look, potentially this is actually an interesting point in time for a short position in terms of the actual what looks to be the corrective portion of this. Look, I could see an A, B, C there, right? I can see an A, B, and a C. Or if not, um, look, I'd have to go a bit deeper on this one, but in terms of pullback, we've already seen a pretty decent pullback back to the highs. So look, it's already hit the 0.618 area. That's already a pretty decent looking type of move there. In terms of the actual correction, looking a bit closer. So yeah, look, I don't really like to take take small moves very seriously. I just don't think it's wise to do that. Um, yeah, I would say that if anything, this is AB, and then this is a zigzag there. So it has to be part of potentially a move that's still unfolding. So this could be C wave here that is still in progress. So that could be wave 1 of the C wave, and wave 2 of the C wave, and then wave 3 probably could be still unfolding, and it might actually come back, make sort of like a double top type scenario in a weak manner. And obviously you'd have to see wave 3 and then 4 and then 5 zigzag. So it could, yeah, it could actually come back a little bit. If it falls below this level here, right there, then basically that's going to invalidate that idea, because obviously the zigzag for wave 3, you can't go below the A wave of that. So yeah, look, at this point it looks like we're still in the corrective process. To have this come back up here would be, a good thing. But waiting for the D and the E pattern would be even better. The D pattern and then the E potentially, well, depending on how big the D is, and then obviously the E up, and then you'd get your move down. So you could play it that way, depending on your risk reward tolerance, and also at which, and if you believe firmly that this is a wave 1 down, for the E wave that's more than likely incoming for this, you'd have to make your own assumptions, based on probabilities. Obviously that's how it works. But the framework is there if you know the waves, definitely. But if that's the end of D wave, I have no problem with assuming that's a wave 1. But then you just have to make sure you see the correction in its entirety. If this was going to be something that's going to keep going higher eventually, this wouldn't be a 5-wave move. It'd be more likely like a zigzag pattern, which that doesn't look like it to me. So anyway, I'll leave it there. But just thought I'd do that because I was looking at the bigger picture the other day and thought, why not? So thanks for that, and hopefully you found it interesting and enjoyable. Thank you for watching.